item by item tax forms. So let's take a look first at the syllabus. Yes, sir.
Like payroll, reporting classes,
I'm trying, that's what I'm saying, I'm trying to do that today.
and you be able to find
I will post the links to YouTube, but that's if all this magically works. That would be my hope, clearly. Okay, so syllabus. And again, just bear with me because this is just all so new. Probably gonna get sick of me saying that. Okay, so tell me what lights are gonna work best for you guys to see the screen. Do you want your lights on back there? And then this light off up here? Is that the best configuration? Okay, great. All right, so if you haven't visited me, I am up in room 408 now. This is a 4-credit class, 2 hours of lab, 2 hours of lecture, same phone number, same email. You have to have done through payroll to be in here for obvious reasons. And my office hours are Mondays and Wednesdays, 12 by 1 and 5 appointment. So you can, on your own time, read the relationship to program course description. I make a point of saying this is an in-class class. It's not hybrid. It's not online. Anything I put online is because I've taken the time to do it. So there's things I may say in class that do not make their way for whatever tech reason or for whatever reason do not make their way to the Moodle shell. However, obviously it's a great tool. I'm going to try and do that as much as possible. So what are we going to be doing in here? Again, you're used to seeing this on my syllabi. Student performance outcomes outlined. These are really essentially the things you're going to be assessed on, you tested on, because when you're done with this class, you should be able to do these things. You should, number 7, be able to apply for various basic tax credits. You should, number 10, be able to analyze a source document. Any idea what a source document is? What do you guys know? Yeah, what do you use to prepare your tax returns? W-2s, 1099s, maybe you probably now get a 1098-T that shows your tuition, right? Earned income credit, anything that you read and analyze and use to input into your software is a source document. Number 4, identify components of rental income. You can read through these. This is only individual tax. You're not going to be doing any corporate tax, partnership tax, estate tax, trust tax. And I feel the book, I believe, has 14 chapters. I used to try and cover a chapter a week. Just mind-boggling for both you and me. So we only go through 7 chapters, and I chose the 7 chapters. I have a side tax practice that I've had for 26 years, let's say, and I chose the chapters based on what 90% of my clients are. So I would feel like when you're done with this class, not only should you very easily be able to do your own tax return, but you should be able to prepare a pretty basic 1040 for anything. Now, with that, I will tell you that it is very lucrative to be able to do taxes. Everyone needs their taxes done. 80% of Americans pay someone to have their taxes done. So, if you can pick up the skill set and have a kind of an eye for the detail, and you also have to like people because you have to have clients, you got to talk to them, everyone's terrified of doing their taxes, by the way. So there's real fear around taxes. What if there's no tax police. And less than, I should probably start the lecture off with this, but less than 1% of all tax returns get audited in this country. Okay, so woefully inefficient system. And I guarantee you, unless you guys have family and friends that are incredibly high net worth, most of us with our W-2s and 1099s and little rentals or self-employed income are not candidates for audit. Okay, that doesn't mean that you shouldn't always, obviously, 100% professionally try to get the tax return right. But there's just not, it's not an edgy situation if you catch my drift. So I encourage you to think about it. Do you have an knack for this? Is this of something that you might, be able to develop into a side gig? It's been a great ride for me personally. Okay, materials and supplies. 3 things. One is the book, and this is our Bible. Like I said, we're going to cover the first 7 chapters. And I am an author for this book, and I do all the PowerPoint slides. You guys are used to my PowerPoint slides from payroll. I write the slides for this book as well. So it's everything that I think is important. And then we'll be doing the homework from here, the manual homework, and I'll look at that in a second. Okay, then on Moodle, there is, I'm sorry, I am so drippy from the smoke. My nose is just kind of a mess. Let's see. On Moodle, you should see something called income tax packet. And let's go ahead and take a peek at that. So this is the crux of the tax returns you'll be preparing. And you can see it starts out part 1, so there's part 1 and part 2. Part 1 is the 2 assignments for the manual tax return prep, and that's one I was talking about that you actually are going to manually fill in a line after line after line. You're going to not be fond of when you go through that process. But the reason that I do it is you can't really review software-generated tax returns if you don't know what you think should go in the lines. So that's why I had to do the manual ones. So the first one's 50 points, the second one's 100 points, and these are challenging. These are really challenging tax returns. And if you scroll down, you'll see part 2. And these are the tax returns. I believe there's 18 of them that you will be preparing in the Pro Series software. And we are able to get into it. There's a third administrator problem we have, which needs to be solved before Tuesday. Normally I like to get into the software on the first day, but that's not going to happen. So I just want to kind of read through the first couple paragraphs here and just get you thinking about what we're going to be doing. So there's 18 cases. You will spend some class time on these tax returns. However, you will be required to invest time outside of class. It didn't look like there was anybody in here before our class, right? This room is empty. So that may be a great hour. We'll see what happens at noon. I don't know if somebody's coming in or not, but it's, I believe, only in this lab. So I encourage you to come back. It's kind of tricky because it's not software that you're able to get at home. I paid at least $700 a year for it or something. So it's expensive software. Obviously, we have an educational license. So you're going to have to work on it at school. Actually, could you have a sticky note? Can you just write me down a note to get 339 schedule? So I'll get the classroom schedule in here for you guys and be able to get it to you so you know when this room is open and available. Thanks.
I'm unclear. The types of software we're going to use in this room.
Yes.
But these are wireless connections, so the software's on these machines particularly.
Yes. They are licensed to particular CPU VIMs. And obviously you can't access your tax returns unless you've got the software open. There's a printer back here. We have one printer in each lab. I believe the name of the software where you buy your print cards now is called PaperCut, and I think that's on your desktop. Can you memorize that? Yeah, up there in the top right-hand corner is a little piece of software called PaperCut. That's when you purchase your printing. We have no cashier in this office, or in this building. There's no dollar bills transacting. Although that doesn't really make sense because we've got a bakery and a coffee shop. I'm standing corrected already. We're going to do both federal and Montana state income tax returns for every client. And when you hand these tax returns in, I'm on the second paragraph now, you need to review them to make sure that the Montana and the federal tax returns reconcile or are in balance. And I said, I'll show you how to do this. That they're in proper order. So on your federal tax return in the top right-hand corner of each form is a sequence number. So Form 8829, for example, is office and home, but sequence number may be 12. That means, obviously, that's how you sequence it. They come out of the printer like that, but then students will have everything all over and then just throw them all back together. You've got to make sure that that sequence order is appropriate, because if you file a paper copy and the sequence order isn't jiving, you're going to have issues. And then all the supporting schedules required are in place. When you hand your tax returns in, the federal tax return should be on top with the Montana state income tax return behind it, and a manual recap must be attached to the front of each tax return. What the heck is a manual recap? Well, a manual recap is right here. Manual Recap 2016. And you will want to print one of those for each manual tax return and for each, here we go, each manual tax return and for each computerized tax return. What a manual recap is it's actually your tax return in 2 columns. And if any of you are familiar with an actual 1040, the bottom number on the first page is something called AGI, and that's also the top number on the second page. And that, you can see that up there, it stands for Adjusted Gross Income. So what you're going to be required to do with these, and again, this is not gonna endear me to you, but this is how I was trained to do taxes, and I believe in it unequivocally, is you will be required to complete one of these manually before you go on your software. So the client comes into you and they say, here's my W-2, Lisa, here's my spouse's W-2, here's my tuition statement, and here's a profit and loss for my rental. Okay. If I just put the numbers in the software and print it out, what's the danger? That's a pretty simple example, just give you.
That data going in?
Yeah, your W-2 says 42,896, and I put in 42,968. Okay? How would I know that? If I hadn't made a summary, i.e. a recap, of what I thought should be in line 1, wages and salaries. I would have no way. Yeah, it's my review mechanism. You're not going to love these, okay? They're pretty tricky, and they will require you, particularly as we get onto things like Schedule C, which is for self-employed income, or Schedule E, which is for rental, Schedule F, which is for farms. It will really require you to kind of go do that form by hand to get the bottom number to plug in. Now, I guarantee you're not going to do these right, but they will help you one of 2 things. When you get the software input and you've got your manual recaps sitting in front of you and they don't work or reconcile, you made a mistake in the software or you made a mistake on the recap. And that's what you use, of course, as a review mechanism. I have a solo practice for my tax base, about 45 clients. How would I ever know if I was giving you a correct tax return if I didn't have a way to review myself?
So it's working paper.
It is a working paper, and but it's all, yeah, it is a working paper, but and it's your review mechanism. So, and I will tell you, it doesn't take very long. You start a tax practice, if you start getting tax returns kicked back, that you lose clients. They want precision from their tax accountant. So these are required. Now, so you do your whole annual recap, and you put your date in, and you had the wrong number in your Schedule C. It's self-employment. So I've got a little side gig selling Arbonne. I sold $3,000 worth of product. My cost of goods sold was $1,500. So I should have $1,500. It's called SE income, self-employment income. What do we know about SE income? You pay income tax on it, but you also pay,
Payroll
yeah, you pay SE tax, right?
tax.
So, huh?
7.65%.
Well, but if you're self-employed, 15.3%. So you put in, you get the wrong Schedule C number. Your tax of your income tax is going to be wrong. Your SE tax is going to be wrong. Everything's going to be wrong from here on out. So you're like, oh my God, my annual recap's wrong. It's not. Do not go back and erase and write in the right numbers. It's served its purpose, hasn't it? It's shown you, oh, I have the wrong SE income. You want to go back, check your calculations. The goal isn't that you erase all this and make it correct, and this will drive you crazy as accountants, that you're handing in something to me that you know is the right numbers. But it served its purpose as a tool. When I was trained, I trained at Boyle, W. and Meyer, which is a local CPA firm, for 2-3 years, I think. When the first moved here in 94, 95, 96, I went tax seasons there. And this was the mechanism we used. And then when you would send your tax return upstairs to one of the partners, you would have to kind of write in like, the reason my number is different from the tax return, miscalculated Schedule C number wrong. Or, kind of pencil and why anything on the annual recap was wrong. That's a great tool as well. I do that in my own practice, and it's just helpful so that you can go back and see what you did. So this will be on the top of every tax return you turn in. Okay, where are we? And then really the only other thing those two bullets say is no one wants $3 to go to the fund. And because of, this really isn't good pedagogy, but I'm just going to say it out loud, because of the complexity of administering ACA through tax returns, the Affordable Care Act, there's premium subsidies, there's advanced premium credits, it's quite complex, although it is widely applicable because now everybody in the country is mandated to have health insurance of some sort. We're going to do a couple cases where I throw a little bit of a kicker in, but for everybody else, it's going to be one of our first choices on our general information. Assume everyone either procured his or her own health insurance in compliance with the ACA, or it was provided by the employer. Therefore, no one will have an individual responsibility payment on line 61. Individual responsibility payment is tax code lexicon for penalization for not purchasing health insurance. So we're only, I think I've got 1 or 2 cases where I've thrown a few little quirks in there, but otherwise we're assuming everyone that you're dealing with has got health insurance. So, and you can see, so there's going to be cases assigned with each chapter. And the first chapter is cases 1 through 3. And those will be due in a couple of weeks. I think we're looking at the September 14th for those. Okay. So the last supply contains tax return packet found on Moodle, plus you should print 18 manual recaps, right, because I'm going to on the top of each one. I will tell you, you're going to need a decent printing budget in here. That's just what it is. And you guys know me, and I don't like to generate paper for the sake of generating paper, but it's really critical, even if you electronically file. First off, you've got to keep a hard copy as the preparer. And it's just way easier to review on paper, so you will need a printing budget. And then lastly, there's a packet of source documents. I tried to just scan them and put them online, but they didn't, just for a series of reasons. They're old, I've had to redact them, I've had to change data obviously on them to keep them confidential, so they just didn't scan them. So there's a little coffee shop over on Russell called Mike's. It's right across from Boyce Lumber. Did you pick up? Did you have something else there? You bought like a capstone pack or something? Oh no, it wasn't capstone. At any rate, it's $6 or $7, and you need to look at that. That is, and I will tell you, frankly, that was one of my biggest problems learning how to cut tax returns, is how to read the source documents. So for example, if you're all clients and you all have brokerage accounts, and you're with American, and you're with Prudential, and you're with First Bank, and you're with Roe, Vanguard, whatever, they all look different. Every single one of them looks different. So to glean the information from those is really, I mean, it's pretty freaking important that you know how to do that. And it's got to be accurate. So again, you will not love these exercises, but we're going to learn how to read a buy-sell statement on real estate. We're going to learn how to read brokerage statements. We're going to learn how to read just general like 1099 INTs and DIVs for interest and dividends, 1099Rs for retirement, 1099 SSs for Social Security. So, I mean, these are all just source documents that you get from clients, and they're not like far out there documents. A lot of people have these. You have a bank account and you make a couple bucks in interest, you're going to get a 1099 INT. Okay, so you got to be able to read it. So those are your three supplies: the books, the packet at Mike's, and then printing the tax packet and the manual recaps from here.
What's the name of the packet?
It's just called Income Tax Packet, ACTG 211. Huh? No. He just bought, it was Denny's forever. And Denny was down on South Higgins. And now Mike bought it a couple years ago. I don't know Mike. Huh? Across the street from Boyce Lumber. If you just look up Mike's Coffee Shop, you'll get the address. Something Russell. Okay, I don't have any issues in this class. I'm not going to spend time, but obviously I don't want you poking around on your smartphone. You got to be honest, and if you need any sort of accommodation, it is my obligation to you to help you with that. So let me know what accommodations you need, and we'll make that happen. From homework, from the text, so from this book, you'll have homework at the end of each chapter. So, for example, on your syllabus, I'll show you just a couple different. There it is. So I think like the third page of your syllabus, it says homework problems from textbook. So, and I guess we don't need to look at this, but there's group 1 and group 2, and I specified which group at the end of the chapter it's from. That homework, you can either, I think these pages rip out, or you can just leave them in the book, because you're not going to turn this into me. Okay? What we're going to do is we're going to grade it together in class. And then when you come in, like say, I've asked you for chapter 1 to do number 1 through 14 and 16 and 17. I'll come in and I'll put up on the board, 3, 9A, and 10C. And you'll write down the answers to those, and that's what you'll hand in to me. Okay, so I'll give you, 3 points or 2 points or 1 point, depending on which of those you get correct. But we'll go through all of them together. So yeah, I guess you wouldn't have any reason to tear this up.
Well, the reading through the statement of values assignments you do.
As we go, yeah. So I have a daily plan like I always do, but I will give it out because if we need to spend an extra day on something, we do. And if we get the topic covered quicker than we think we do. The first chapter 1 homework will be due a week from today, September 7th. So I always give you a long heads up. Also, for Tuesday, and hopefully this next hour of lecture will adequately prepare you to do this, I would like you to do a manual recap for the first 2 cases. The first 2 tax cases, and they're super simple. All they've got is W-2s. In other words, you're going to print that manual recap, and you're going to fill in manually the numbers that put maybe on software on Tuesday are going to be matching manual recap.
And the statement comes from the tax calculator.
That's from the tax calculator online. So the tax, we're not even going to look at those source documents. The source documents go with the manual tax returns, and we can't do those till we get to like chapter 4. So right now, all we're working from is the 18 cases. What else? Tax returns prepared on the software, I've gone through that. Tax returns prepared from the packet. These are the source documents. You must learn to read and prepare tax returns. You will analyze and extricate data that includes broker statements, closing statements, escrow documents, and 1099s. You will use the data from these source docs to prepare 2 manual tax returns. The assignment will be due, these assignments will be due at 2 different times during the semester, and they're further down the road because they're more complex. Okay, attendance and makeup, obviously you need to be here. This says we meet twice a week for 2 hours each time, so missing a class is, obviously not such a hot idea. And you can see it's 663 points in the class. The test comprised 268 of those points. So really the work is where the points are. 200 points allocated to the software-generated tax returns, 150 points allocated to the manual tax returns, and then the problems that you give me from the chapters, 45 points. I'm always a straight 90, 80, 70, 60 grading scale, and we have the weirdest calendar this year. This starting on Thursday is just bizarre. And finals this semester starts on a Wednesday and ends on a Tuesday. Whose brainchild this was, I have no idea. I can just tell you that it really took a lot of time to correct all of our daily plans. And then they're like, we're going back to the old way next year. So thanks for that. So stay tuned as to when the homework, or when the final is. I can tell you, in all honesty, that I'm not going to be giving finals on Tuesday or Wednesday, the 19th or 20th. I'm just not. I'm going to BC to see my son for Christmas, and I'm going to be heading out with him. So we will find a finals time that works. You can't have more than 2 finals in a day. And I don't want to start this yet. We'll just make it all that.
I have a question.
Yes, sir.
So we're not working on assignment 1 or 2 to start when you're talking?
No, not until chapter 4. We're starting on that tax record called Part 2, Case 1, Linda something or other. And Part 2, Case 2, yep. Okay, so, questions? Are you guys excited to be back at school? No, Klaus isn't. Kind of sensing some frownies. Okay, well, that's it. I think that's it. Yep. Let's go ahead and take a look at chapter 1. And I'm going to see if I can, again, please bear with me here. So I'm going to load up this hover cam, and I'm going to see, not that it's going to be so important per se today, but see if I can okay. And then move a piece of paper under here and calculations. I'm going to have to learn how to get myself prepped for all this a little bit more seamlessly. Okay, so this is technically, so we can capture stuff on the board, but I've got to turn this thing around and use the webcam, and then I'm in it, and I'm just not going to do it. I'm just that vain. I do not want myself taped for 2 hours of a show. So I am going to try and use this DocCam to record any additional calculations. So when I write on the board, it will not be captured on the film, obviously, because there's nothing that's in here capturing it. I'm not happy about the loss of the smart boards. I'll just say that out loud. But nobody seems to so much care. Okay. No, they took them all out to West Campus. Now, technically, I was told that if I click, I can get both of these up at the same time. But that's not really happening, is it? Oh, there we go. There we go. Okay, and then click on this. Beautiful. Okay, so technically, can you guys see, is this too small for you to see now, or can you see the PowerPoint pretty well? Okay, and then, can you see that? Okay. Sorry. I don't know what I'm doing here. Or maybe just zoom? No, that's not the key, is it? Well, we'll have to work on this. Yeah. Okay, well.
There you go.
Oh, you guys, it's more clear now to you?
It was. Yeah.
Okay. So it's just the light. Okay. Yeah, okay, cool. Well, let's see how this goes. No?
It's all focusing.
Yeah. But I'm not moving anything.
It's trying to focus on the outside stuff in what you're writing. So it's
Okay.
Bracket the page and then borders.
I'm sorry, one more time?
Border the page with the brackets and then.
Okay, so go this way. Huh, that's not helpful. I think this is maybe going to need a little practice. No. Okay, well, I don't want to take any more time if this isn't going to be helpful today, because we really do kind of have a lot to go through. So in the first chapter, Should I turn the lights all the way off now, do you think? Better? In the first chapter, we're just going to be basically going through the tax formula, okay, which is essentially a 1040. A 1040 and a manual recap look exactly the same too. A manual recap is just a columnar replication of a 1040. And a 1040 is a front and back form with supporting schedules. We're not going to talk so much about Montana today. I just want to get some basics under your belt as pertains to federal tax law and numbers. But be aware that pretty much everything that we're talking about has got some corollary in Montana tax law. And the numbers aren't the same. And the calcs aren't the same. A lot are, but a lot aren't. I'll try and point that out as we go through today, but again, I'm going to mostly be focusing on federal. So up until 1913, taxes were voluntary in this country. The 16th Amendment was passed in 1913. There's been lots of tax protesters that have tried different tactics and strategies and relied on constitutional premises to avoid paying taxes. None of them have been recognized as valid. And so income taxation as a source of federal revenue is, I guess, accepted as a part of our revenue stream. But it's not only used to raise revenue, it's used for other really important things. And without looking at this, I know it's hard to say no, give you an example, but can you think of an example where tax helps craft social policy? Okay, how so?
Mortgage deductions.
Yeah, it's desirable for us to own homes. So we get to deduct our mortgage interest. Great. Anybody else have any other ideas? Without looking up here.
Child tax credits.
Yeah, child tax credits. We want healthy, happy children. So we help people with things like earned income credit, child tax credit, child care credits. Lots of credits based around children. Okay? So we're going to see over and over and over, and I'll try to speak to that. I think that's one of the most interesting parts of tax to me, is how it is used from a policy perspective to craft social policy. Also, obviously, economic policy, and I'm going to spend a ton of time here. These are a little bit more complicated, but for example, something like accelerated depreciation. So I'm a businesswoman. I purchased a $400,000 lathe, and I get to write it off all the money. So I save a ton on taxes that year. The theory being what? I'm going to reinvest into the economy. It's a supposed Reagan trickle-down economics, right? More money in my pocket as an entrepreneur, create more jobs, etc. Economists on both sides of the plate as to whether or not that works as a theory or as an economic model, but I'm just telling you that's what we do. Credits for investment in solar and wind, although the current administration probably looking for those to phase out. We don't know yet. Wind is definitely phasing, solar maybe. But it was highly desirable the 2 terms of the Obama administration to scale those up. So we had tax credits. So it shifts and crafts economic and social policy. Okay, so probably a lot of you maybe even file a 1040EZ. And it's just what it says, easy. If you don't have much going on, you're single, you just have wages or salaries. So you can always file the simplest form that you're qualified to file. I think in EZ you also have to make under like $100,000. Then a 1040A, you might have a few more complexities. 1040 for a full-fledged tax return. Your software will default to whatever is the easiest form. Okay, so here is what you have to do. Thanks, Janice. Here's what you have to comply with to be able to file a 1040EZ, 100 grand or less, no dependents, no credits other than EIC. 1040A, this is for, like, say I make, I've got some kids and I've got a W-2, I'm going to fill out a 1040A. And then a 1040 is for everyone else. I will require by Tuesday, and we'll go over this first thing in class, you need to memorize these 6 schedules. These are very, very, very common schedules. So when I say to you, hey, what does your D show? You're going to know that I'm asking what are your net capital gains or losses. When I say what's the number on your B, you know that you're going to recap the interest and dividends. What's your net income or loss on your F? Oh yeah, that's my farm. Okay. E is a little bit more complicated. It's got 4 distinct parts. One is your rentals. Okay. And that can be anything from I do Airbnb in my basement to I own an apartment building. Royalties, I do some authoring. I wrote some music. I get copyright royalties. And then the back side of the E is if you are a stockholder in an S corp or a partner in a partnership. You'll get some forms from them called a K1. That's your share. So E's are pretty complicated, actually. But at any rate, at this point in time, you need to memorize the names of these 6 schedules. It's kind of like our working lingo. Okay? I'm not going to spend a ton of time on this because we're not doing corporations or partnerships, but neither S corps, okay, 1120S, neither S corps nor partnerships pay tax. They actually file tax returns and then issue K1s to the partners and the shareholders. So if John, Klaus and I had a partnership together, 40, 30, 30, and our partnership made 100 grand, we'd each get a K1, 40,000, 30,000, 30,000, our distributive share of the partnership. So that's called pass-through income or loss. The partnership, the S corp, does not pay tax. It passes through. And each element individually passes through. So our partnership may have some capital gains. It may have some passive income. It may have some regular income. Each of those elements pass through with their own character so that we put them on our tax return accordingly. Okay, so now this is where I'd like to have this side by side. This is the manual recap. This is the 1040. This is the tax formula. The whole left column of the manual recap culminated in that bottom number, AGI, okay? Adjusted gross income. So that's all your items of income minus your deductions for AGI. Then there's 2 things you get to deduct. Everybody gets to deduct. One, the greater of your itemized or standard deductions. A standard deduction is a deduction that everybody gets based upon whether on your filing status. Am I single? Am I head of household? Am I married filing jointly? Am I married filing separately? Or am I qualifying widow or widower? 5 choices. But if my itemized deductions are bigger than that number, I get to take that out. John gave us an example of an itemized deduction earlier, mortgage interest, charity, property taxes, license plates, medical bills in excess of 10% of your AGI. Okay. So if I tally up all those numbers, and they're bigger than my standard deduction, I get to take that. I will generally tell you, I don't think I've ever had anybody have itemized deductions exceed standard deductions without owning a home. Usually it's that mortgage interest that pushes that number over the standard deduction. And then you get an exemption for yourself and for each of your dependents. That equals your taxable income. So obviously the amount of your actual income and what is paid tax on can be very, very different numbers. Then we're going to learn how to use the tax tables for tax rates. You get the tax, that's your liability. Well, no, that's not what you write a check for because during the year you paid in, right? If you're self-employed, you paid what? Hopefully you get your quarterly payments, estimated payments. If you're a worker bee, you paid in with your paychecks, right? So those are all prepayments. You might also have some tax credits. We talked about some earlier. Earned income credit, child tax credit, tuition credit. Yeah. And then that tallies down to your money, or they owe you money. This really is essentially the same for Montana, except for, just for giggles, let's see if this is going to magically work now. It's exactly the same for Montana, except there's two sections. Not? Well, I think this is probably going to take some more practice. There's two sections right in here. It says additions and deductions. So, and this is probably with anything else. This is your first kind of reintroduction to Montana. The way Montana works is it starts with federal AGI. Starts with federal AGI, and then you've got a schedule for additions. In other words, stuff that Montana taxes that the feds don't. And then you've got a schedule for reductions, which is stuff the feds tax that Montana doesn't. And that gets you to Montana AGI. And then Montana has its own standard deductions, has its own exemption number, but everything else is the same, it's just different numbers. Okay, so the formula is the same except for that exception of plus reductions, or plus additions minus reductions. And why does that say 2015? Huh. Sorry, this is puzzling. These should be 2016 numbers. Huh. Okay, in the back of your book, let's just take a look. These numbers change every year, so honestly, I just have a poster in my office. There. Let's look right in the inside flap. It says Quick Tax Reference Guide. Okay, so these are great numbers. That is disconcerting. So your exemption, sorry, hold on just a sec. Some of them appear to be correct now. 2017. Huh? Okay, well, this, I don't know, these files were sent back to me by the publisher, but these are not. So I'm going to just correct these right now. So these numbers are the standard deduction that everybody gets based upon their filing status. And I talked to you earlier about the filing status: single, married, filing joint, qualifying widower, head of household, married, filing separate. Plus, you get these additional amounts if you're over 65 or if you're blind. And if you're both, then you get whatever these numbers are twice. So let's make sure, 1250 and 1550. So for example, if I'm single and I'm 67, what's my standard deduction going to be? Yeah, it's going to be the 73 or 6,300 plus 1,550. Right? Do you see that? Because I'm single and I'm 67 years old, I get to take the 6,300. Everybody gets that. But I also add $1,550 onto the number, making my standard deduction $7,850. If I'm married filing separately, and I'm blind, what's my standard deduction? $7,550, right? $6,300, I picked that up from the chart. Plus, with this one, I just had $1,250, right? Because I'm married filing separately. If I'm married filing jointly, and we're both 70, what's our standard deduction? We're both 70. Anybody? Well, I think, so I've got to start with the 12 steps, right? And then I've got to add 1250 twice, because we're both over 70. So 12 steps plus 12,600 plus 1,250 plus 1,250, I think it's 15,100. Does that sound right? Okay, so you see how that works? Now, you're always going to use your standard deduction unless what? Unless you're itemized at home. Filing status. Your status is whatever you are on 12/31. So if you get married at 11 p.m. on 12/31 and you're single, you're married at the end of the year, right? So to be single, unmarried, or legally separated as of 12/31, and you don't qualify for these other three categories: married, filing separately, had a household, or qualifying widower. Married filing jointly. If you're married on as of midnight on 12/31, you're married filing joint or married filing separately. It's almost never. Okay, here's the second big change, big difference between Montana and feds. For the feds, the only time I've ever seen anybody do married filing separately is when you have, usually the scenario is older folks coming together with their own assets and kids and grandkids and estates, and they don't want to merge those. And they maybe don't necessarily want their husband they've married in their 70s to know all their financial details for whatever reason. Okay? It's never beneficial from a tax standpoint. In other words, you're always going to pay more tax doing that.
So some people also get married, single, but I think the other spouse is up in terms of taxes.
That does,
Back to double share culpability.
yeah, I can't say I've ever personally had that experience, but yeah, that would probably be a reason that you might consider segregating your taxable income from your spouses. But for Montana, if you're both earners, right? You're both earners, both have some sort of earnings, it's almost always better to marry filing separately. So the way that it works in Montana, and this is one of the things you'll struggle with when you do Montana tax returns, is if I'm mostly a stay-at-home mom and I make $5,000 a year, super part-time, cleaning rooms, and my husband, makes $50,000 a year, it's not going to be beneficial to marry filing separately on Montana because I don't have enough income to absorb my own standard deduction and my own exemption. Does that resonate with you what I just said? If I make $5,000, that's my W-2. I don't have enough income once I subtract my Montana exemption amount, which isn't those amounts I just put up, those are federal. But when I subtract my Montana standard deduction and my Montana exemption, it puts me into a negative number. So I've lost a write-off. So in that situation, it's going to be better to marry filing jointly. And you'll learn to eyeball this. I'm not maybe doing a super great job explaining it quite yet. but you'll see if there's really disparate incomes, that it's probably not a good idea to marry filing separately for Montana. But if you make 20 and your hubby makes 30, you're gonna always be way better off married filing separately. And if you're unsure in the software, you just go in and you check the numbers both ways. You put a married filing separately, you go see what the refund or tax due is. Oh, my refund's $896. Now, then I go to married filing jointly, my refund's $1,232. Obviously, it's better to, and that brings up another really good point. Your obligation as tax preparers is not just to get numbers in software, it's to maximize tax benefits for your clients. So that's what they really pay you for, and not just the H&R law or the other tax prep franchises. But the folks there are trained to get numbers in software. They're not trained to ask questions to maximize benefits or to help people do some strategic planning around when transactions should occur to maximize tax benefits. And that's where you add value to your clients. I always tell my clients, do not show up at the end of the year and tell me, I sold my duplex. You call me when you're considering selling your duplex. And we talk about the tax ramifications and is that a good idea this year or next year, when you inherit or when you retire or whatever. I mean, there's a lot to the timing of things. So as you get more sophisticated, you always want to encourage your clients to contact you before they complete a transaction, because once it's completed, then that's just that. Okay, head of household is a very desirable filing status, and you can see that because head of household, look at, you get a $9,300 standard deduction versus $6,300 for single. And they also have different tax tables. So this is if, as of 12/31, you're an unmarried or abandoned spouse. An abandoned spouse is a tax term that refers to, this one says you still know where your spouse is. Again, I've never personally had somebody, qualify as an abandoned spouse, but neither is it completely unheard of. What the hell do I do? I haven't heard from my husband in 14 months. So, and you've got to jump through hoops to get qualified again. Anyways, unmarried or abandoned as of 12/31, you pay more than 50% of the cost of keeping up a home that was a principal resident of a dependent child or other qualifying dependent relative. So I'm single and I've got my 3 nieces living with me. I'm paying more than 50% of the cost of keeping up their home, of keeping them in the home. They're a qualifying dependent relative, and they live in my home. I get head of household status. Okay. The one exception is if your parents, one or both of your parents, are your dependent. Now we're going to go through dependent requirements in a second. If one or both of your parents meet the qualifications as a dependent, you can get head of household even if they live on their own. In other words, they don't need to live in the home. So I paid for my mom to live in an assisted living facility. She meets all the other requirements of a dependent, and I'm unmarried, I need the head of household. If I do the same for my disabled auntie, no, because she's got to live in my home. Does that make sense? So everybody's got to live in your home to get head of household. If you qualify as unmarried, you pay more than 50%, except for your folks. Then we get into this really tricky situation, and I will tell you I've seen this 100 times, where you're literally freshly divorced. And everybody thinks they understand what's going on with the tax situation. Oftentimes it's like, if there's 2 kids, it's easy. You take one and I take one and put it on my tax return, blah, blah, blah. But oftentimes people will, either knowingly or unknowingly, take kids they're not supposed to take these dependents. This just happened this year. I did a tax return for a woman. I'm newly divorced. She's a new client. Both my kids are my dependents. I put them on her tax return, gets kicked back. Her ex-husband's already filed a tax return with the kids' social security numbers on it. He got EIC, he got head of household, he got their exemptions. So now you've got a big fat mess. So you really, if you've got somebody that's freshly divorced, the person you want to see honestly is divorce decree. I always keep that in my working papers. So if they're divorced, a person that takes the dependency, i.e. my divorce decree, I've got one kid, my divorce decree gives my son to my ex-husband in perpetuity. He gets to take him as an exemption. But I can still take head of household if he lives with me and I pay more than 50%. You with me? So these are all, and as you get more sophisticated doing this, when somebody walks in and you just get a feel for their life in about 5 minutes, and I'm freshly divorced and I've got a kiddo, you know the questions to ask. Where does the kiddo live? Does he live with, well, we share. Well, share how? Well, he's with me 5 days and with my ex 2 days. Well, that would make him in your home more than 50% of the time. Do you pay more than 50% of the cost of keeping up that home? Yeah, I do. Were you married as a 1231? Bingo. Head of household. Okay, here's our tax brackets. 10, 15, 25, 28, 33, 35, and 39.6, although you could actually arguably go higher than that if you have something called NUI, net unearned income. This is part of ACA to tax people that have most of their income. I make $20 million a year and it's all in the stock market. Okay, that's net unearned income. I can arguably pay higher than a 39.6 percentage because I don't earn any of my income. Okay? It's all unearned. It's in the stock market or real estate or passive income. And then the second big bullet, and I know some of this is really technical, but I'll say it a bunch of times, so just bear with me. I don't expect you to be able to walk out of here and regurgitate everything I'm saying today. There's a lot, but you got to plant the seed somewhere. So for most of us, we go to work, we get a W-2. We might have a little side gig where we make some self-employment income. We might have a savings account where we get what do we get at the end of the year? That shows our interest. A 1099 INT, right? You maybe grandma left you $5,000 when she passed, and you put it into the stock market. And you get some, what do you earn on stocks? Dividends. You might get a 1099 DIV at the end of the year, right? If your 1099 DIV shows that you have something called qualifying dividends, and there's a little box right on the 1099 DIV. You don't have to figure it out for yourself. It's right in the box. Those are taxed at different rates than this 1039.6. Those are taxed at much lower rates, either 0, 10, 15, or 20%. Why? Why do I go to work, actually labor, and pay a higher tax rate than somebody that's got qualifying dividends? I don't know if you guys remember, but it's all part of that economic engineering with tax code. And this all sort of came to light your average Joe. I think it came out in the 2012 economy, man? Is that wrong? That he released his tax returns, and he paid less tax percentage-wise than his secretary who made, $150,000 a year. It was all unearned income. It wasn't going to punch the clock. It was $48 million of unearned income. So he was taxed at a much lower rate than, for example, I am. Yeah. So that's one thing, qualifying dividends. And then the second is something called net long-term capital gains. Does anybody have a feel for what a capital gain is?
Difference between what you paid and what you sold.
Sold what?
Whatever you're investing in.
So that's exactly it. So the difference between your cost basis, and there's nothing new here, between your cost basis and your selling price is capital gains. I bought 6 shares of Disney for $50 each. Right? So I paid $200. And I sold those 6 shares of Disney for $8 each. Okay, so I've got capital gains of, what's that,
$180.
huh,
$180.
$180. That's in net long-term capital. That is also taxed with preferred rates. Capital assets are stocks, bonds, rental real estate, and then things like jewelry and antiques and coin collections and things like that, which you see very little of. Valuable art. 99.9% of all capital gains transactions that I handle are, I sold some stocks, I sold some bonds, I sold my rental unit. Capital gains rates. It's not that easy in real world play because there's different kinds of taxation, but I'm trying to give you an overview. What am I telling them? Can somebody kind of encapsulate this? Explain it to a layman. Why is somebody who doesn't have a job but owns 26 high-rises in Manhattan, why does she pay less tax than I do and I'm a mechanic?
Because we're slaves, because of our incomes.
Oh, I don't think that's probably the exact prophetic answer.
It's simple.
Um,
It makes it real simple.
Yeah.
We're slaves.
Well,
For the cause.
but we're still being compensated for our work.
Yeah.
So why is there conversation right now to lower taxes even further? That's what the conversation is right now with the current administration, is to lower these rates. To lower these rates.
Because it encourages investment, stimulates growth in the economy.
The theory is back to trickle down. It's going to stimulate Mitt Romney, and I'm not picking on him, it's just easy because it's a public story. If we save him another $3 million in taxes, he's going to use that money and create X number of jobs, right? The multiplier of that. And then those people are each going to pay more taxes, and it's going to have a net positive impact, not only societally, but on the revenue stream.
The rising tide that lifts all boats.
That's the economic argument. And if you're a Keynesian economist, that's what you believe. If you're from the University of Chicago Economic School of Thought, you see many other models and stories that disprove it. So
Economic theory.
there's not one school of thought on it. Trickle down was not particularly. We can't turn to any hard numbers in the 80s under Reagan, where trickle down actually did what we're talking about doing. In fact, it was the opposite. And in the short term, it creates quite large deficits because your tax base falls and you're waiting for a future increase, right? And if that doesn't come, it just balloons deficit, which is essentially what happened in the 80s. So we'll see. Yeah, and then there's so many variables. How do you really point to one thing? Which is really why economists disagree. Then, on the other side of the plate, which is what made President Obama so incredibly unpopular with high-income people, is that part of the piece of 1,950-page legislation known as ACA contained provisions for funding it. And there were two provisions that added tax burdens to high-income taxpayers, which I was alluding to earlier. There's a 3.8% Medicare tax on NUI, net unearned or net investment income, if your modified AGI, if your AGI is over 250, married filing joint, 200 single, or 125 married filing separately. Okay, so that's just unearned income. You pay an additional 3.8%. Also, if you make over those amounts as in earnings, so I'm an engineer in San Francisco, I make $480 a year, I'm single, I'm going to pay 0.9% Medicare on any amount over like $200,000, and we learned that in payroll class. So it's not just enough to say 6.2% OESCI and 1.45 Medicare, is it? You got to say 1.45 or plus 0.9 if you're over these thresholds. Again, honestly, practically speaking, in Missoula, Montana, I got exactly 2 clients that any of this ever applies to. But, you know, if you're doing tax returns in San Francisco, where the wage base is 4 times what it is here, you know, the average guy, you know, picking up garbage could be, you know, over these amounts. So, but it's just not, at least in my tax practice, not that super relevant. But you have to pay attention to it. And if it kicks out on your tax return and it doesn't equal your manual recap, it's like, oh, I didn't think about that. And the other thing is, when you hand a tax return to a client, 90% of them are like, hey, you can sign their name, you write your check and walk away. But you've got to be prepared for the guy that's like, what's that number on line 57? Oh, that's the 0.9% Medicare tax on the amount you made over 250. So you've got to be able to explain every single line. I cannot tell you how quickly you will be discredited if you lose the ability, or if you don't have the ability to do that. And I will be sort of merciless in here about that, because if you hand me a tax return and I'm like, and that's exactly what I'll test you on. What's on line 54? Have to be able to explain every single number. I mean, I'm not going to do that from day one, obviously, but that's where we need to be getting to.
You have a lot less slides than I do.
No, I'm on the student one now. I don't know what is going on with these dang slides. That's the individual. Okay. All right, let's try. And honestly, I'm sorry, I don't have, I'm not at all clear on what's going on with these numbers. Let's try this one. Just take out a piece of paper. And we've got a guy, Juan, he's 29, he's single. He had salary of $39,000 and dividend income of $1,000. And he has deductions for AGI of $2,500. His itemized deductions were $3,000. And I want to know his TI, taxable income. What's his TI? And you can use the inside of your book to get your deductions and exemptions numbers. Huh? So you just follow the tax formula. And again, these numbers are off by $150. So gross income, $39,000 on the W-2. And $1,000 on dividend income. So he has 2 source documents. Deductions for AGI, $2,500. His itemized deductions were $3,000, and his standard was $6,300. So clearly he takes the greater. One exemption. TI of $27,150. let's look at 1040. On page 2-53. And see if we think we can figure out where the numbers up here would actually go on the tax return. So on page 2-53, does anybody have that? Everyone have a book? I don't have a book. Do you have any class? Oh, yeah, you can pull up, yeah, if you go to irs.gov, you can pull up a 1040. Let me show you that too really quick. We've used irs.gov in payroll. So forms and instructions. Okay, well I wanted, yeah, okay, and that's fine too. Here, this looks a little different from last time I was on here. Okay, so, where's my Zoom?
Control and scroll.
One more time.
Control and scroll.
Control and scroll. Gotcha. Okay, so where do we think the 39,000 goes? Yeah, line 7. Where do we think the 1,000 goes? Right, and also let me just point out, we just talked about this, so yeah, your dividends are going to go in here in 9A, but then your next question is what? Are they qualified dividends? Because if they're qualified dividends, they're not going to be taxed at the same rates, are they? They've got that preferred rate schedule. But I would have to tell you that. You have to just assume they're ordinary unless they tell you that. Your total gross income goes on line 22. And you can see if you, well, you don't have a manual recap in front of you because you're looking at this, but the manual recap on the left column, your gross income is about halfway done. Now, what haven't we looked at? These are your deductions for AGI, and I want to make something really, really clear. Take a second and look at some of these. Deductions for AGI and deductions from AGIs. Deductions for AGI are on the front page, and everybody gets those. You don't have to itemize deductions together. So, if I put money in a health savings account, everybody gets it. I don't need to itemize. If I'm moving expenses to go to a new job, everybody gets it. I don't have to itemize. I'm just going to kind of some of the easy ones to talk about. If I'm self-employed and I pay my own health insurance, right on the front page, everyone gets it. Don't have to itemize. Up to $5,000 per year IRA, $5,500 per year IRA, $6,500 if I'm 55 years or older. Everybody gets it. Student loan interest. So you can see, again, a little bit of the kind of social shaping or crafting or molding here. These are things that they want you to do. Fund an HSA, fund an IRA, tuition and fees, student loan interest, everybody gets these. So on my guy Juan, I told you $2,500 deduction for AGI. That's one of these or some combination of these. So what did we end up with as AGI being?
25.
2,500. No, AGI, 37,500. So that goes on line 37. And then is replicated on the top line on the second page, which again should look just like your manual recap. I didn't actually replicate every single line item on the tax return on the manual recap, because some of them in 30 years I've never used. So that's just not what we're going to spend our time talking about. But here's the thing, the last takeaway before I show you how to use the tax table so you can do your manual recaps for Tuesday. The last takeaway is line 40. What do they want on line 40 as pertains to the numbers I just gave you? On one. What number goes in line 40? 6,300. Because itemized deduction for 3 is standard of 63. What if one was 68 years old? What number would it on there? I don't remember. Well, I didn't get the slide either. I think it's 7,550, right? You have to add 1,250 if they're over 65 or blind, and if they're both, you add that number twice. Here's my point. Deductions from AGI, you only get those if you itemize. Juan doesn't get any of his charity because he doesn't itemize. His standard deduction is greater. So his giving to charity is not subsidized by a tax cut, is it? So when I ask you, what's more powerful, a deduction for AGI or a deduction from AGI, your answer is always what? 4, because everybody gets them. Okay, exemptions. One single, but if you had a couple kids, it'd be 4,050 times 3. Okay. If he's got his brother living with him, and if he's all the qualifications for dependent, okay. Now, that takes you to TI. Next question is, where do I get the tax? In your book, or if you don't have a book yet, under irs.gov, and then you're just getting the instructions for the 1040. Okay, and that's going to be your single greatest resource, is the instructions for the forms. And I don't know how to review something, or I don't know how to record something, I go read the instructions for form 4797, and I will 85% of the time get an answer. And yeah, or go to master tax. But okay, let's look at the tax tables. So, for those of you that have a book, it's Appendix A, on page A-1. And what was his TI again, 37.5? 37.5.
Just TI.
27,150, I think I changed it to, because the exemption there is right. I'm going to replace these slides. Again, I do not know if this PowerPoint deck they sent me is not, what is it, 27,150 we decided? Yeah, okay. So single, 27,150, how much is this tax? On page A-6. Let me see. No, I think it says 3,613. Do I have a second on that number? I think that's what it says. 3,613. So the next question is, what did he pay in? And we compare what he paid in to that 3,613, and that's his refund or his amount due. Now, to finish up, let's take a look at what you're doing for Tuesday, which is you're going to read the chapter and do the manual recap for cases 1 and 2. So you're actually going to print out that manual recap and bring them in. I mean, I'm not grading them or anything. They're just starting the process. We have to start somewhere. Okay? And then we're hopefully going to get on the software and be able to input the data. So taking a look at the tax packet. Tax packet. Okay, so our first assignment is Linda Henderson. And just take a second, please, and read through her situation. So you can even bring your manual recap up on a Word document and see if you can get these numbers into it by all 6 numbers together. So you can just go ahead and go and pull up that manual recap and you can save it. And then you can see if you can get these for very simple W-2 invoices. Don't forget on your manual recap about halfway down the first column, you're going to want to get total gross income subtotal there. Oh, sorry, I didn't tell you, no decimals needed on the manual recap, no decimals and taxes. I bet you don't know this about educator expenses, but they're limited to $250 a year. How would you know that? You wouldn't. When would you find that out? When you, no. You- Nice answer though. You would find that out when you put the data in your software and your tax return, then you put your manual recap and you'd be like, what the heck, I put in 982, why is 250 showing? Stick with me here for a sec. Where would you go then to verify that was correct? That isn't until chapter 3. Where would you go? To the instructions to the form. Just saying. Great example right off the bat.